Bitcoin is completely trapped right now. We're talking billions of dollars in leveraged capital caught in a really tight price range. And the data is signaling that a major volatility event is just around the corner. So let's break down exactly where these pressure points are.
$41.35 million. That is the single largest high-leverage liquidation point we can see on this map right now. Think of it like a financial time bomb, just waiting for a trigger.
So, what you're looking at here is basically a financial battlefield. This liquidation heat map, it shows the exact price levels where traders' leveraged positions get wiped out, automatically closed at a loss. Each one of those bright lines, that's a massive pool of trapped money, and it creates these powerful magnetic forces on the price.
But here's where it gets interesting. While most of the market's attention is on the obvious price ranges, the data is showing us one specific, really unusually concentrated cluster of liquidations. It looks like a major player is betting on an outcome that most people just are not ready for. We're going to get to what that is in just a minute.
And hey, if you're already finding this data-driven approach useful, a quick like would be a huge help in getting this analysis out to more people. All right, let's move on and see how this is all building up. We'll start with the first major conflict zone, this massive wall of liquidations that's forming right above the current price. This is the ceiling that's pinning Bitcoin down. And this side-by-side illustrates perfectly how that pressure is actively getting worse. On the left, that's the map from 8 hours ago. On the right, that's right now. See how the zones above $88,000 have gotten way brighter, way denser? That's more shorts, traders betting the price will fall, piling on, which just creates an even bigger target for an upward squeeze.
So, here's the key takeaway. Market makers have a direct financial reason to push the price into these dense zones, because when you trigger those short liquidations, it creates this cascade of forced buying to cover their positions. It basically becomes a self-fulfilling prophecy. The bigger that wall gets, the more likely it is the price is going to go hunting for it.
These levels change fast. You should probably make sure you're subscribed so you don't miss our next update when this whole structure shifts.
Okay, now let's look at the other side of the coin. If the upside is a huge wall, the downside is like a powerful magnet, just pulling the price toward a pool of really vulnerable long positions.
And we can see it so clearly right here. This massive, bright yellow line has formed right around the $85,000 mark. This is where a huge number of leveraged buyers, the longs, will be forced to sell their positions if the price drops, and that just adds a ton of fuel to the downward fire.
So which force is stronger, right? You've got a growing wall of sell-side liquidations pushing down from around 88.5, and then you've got this dense, super concentrated magnet of buy-side liquidations pulling the price towards 85,000. The market is just stuck, right in the middle of this high-stakes tug-of-war.
We actually post real-time updates on this tug-of-war as it's all developing, so for the absolute latest info, you'll want to be following us on Twitter.
Okay, let's circle back to that mystery we started with. That weird outlier bet. While everyone is watching this battle between 85 and 88K, the data shows that somebody out there is placing a very different and very precise trade.
And there it is. If we zoom in on that downside magnet, you can see it's not just some general area of liquidity. No, this is an incredibly concentrated high-leverage cluster. This is not the pattern of scattered retail traders. This really suggests that a large sophisticated player is betting big that the price is going to be driven down to this exact level to trigger a cascade.
And just to be super clear, a liquidation cluster like this one acts like a gravity well for the price. Markets often move toward the path of most pain, and these clusters, well, they represent a single point of maximum financial pain for one side of the trade.
If this breakdown is helping you see the market structure in a new way, do me a favor and share this explainer with another trader you know.
So, what does this all mean for what's coming next? Well, the market is basically a coiled spring. With billions in liquidations stacked so tightly on both sides, the pressure is just building and building for a really explosive move. So here's your strategic summary, just based on the data. The main upside target is that dense wall between 88.5 and 89,000. The main downside target is that concentrated smart money cluster at 85,000. A clean break of either one of those levels will likely trigger the next major leg up or down.
We're going to be tracking this tension zone really closely, so yeah, stay tuned.
At the end of the day, you got to remember this. The market moves where it can cause the most pain. And right now, that pain is building up perfectly on both sides, which means the resolution, it's probably going to be swift and decisive. The only question is, which side is gonna break first?
For real-time analysis as this all develops, make sure to subscribe and follow us on X. Thanks for tuning in.